Now that you're familiar with currency pairs, you need to know how to calculate the exact value of a pair. This next lesson covers what a pip is and how it's used in Forex. PIP stands for percentage in point. This is the smallest price change that an exchange rate can make. An increase or decrease in pips represents a profit or loss in your trades. When currencies are quoted, they are mainly quoted with the fourth decimal. This is also true for silver and heating oil. There are a few exceptions, including the Japanese yen and a lot of commonly traded commodities such as gold, oil, Brent, and gas, all quoted with only 2 decimals. When we look at the Euro-USD pair and watch how it moves from $1.3130 to $1.3131, it has just moved 1 pip because the fourth decimal point increased by 1. Now let's say that the yen moved from 77.60 to 77.61. In this example, it has only moved 1 pip because the last decimal increased by 1. In major pairs, we calculate the value of pips as follows. Let's say the Euro-USD has a current exchange rate of 131.30, and 1 pip equals 0.0001. We would divide those two numbers to get the actual pip value, which in this case would be 0.0000761 euros. Let's go ahead and turn this into a Forex trade to see what the pip would represent in either a profit or a loss. Deal number 1. Sell 100,000 euros worth of Euro-USD at 131.30 with a pip value of 0.000761 euros. Multiply that number by 100,000 euros and you'll get 761 euros, or exactly $10. If the deal is closed at 131.20 with a 10 pip profit, you would multiply 10 times 761 euros, putting your 10 pip profit at $100. Deal number 2. Buy $50,000 worth of USD JPY at the rate of 77.60. The pip value in dollars is worth 1 penny. Divide that by 77.60, then multiply that by $50,000. The pip value equals $6.44 or 500 yen. If the deal is closed at 77.50 with a 10 pip loss, the total loss would be $6.44 times 10, which is equal to $64.43 or exactly 5,000 yen. Hope that illustration gives you a better idea of how pips are calculated. It's my responsibility to provide you with the best information in regards to your trading technique. Which brings me to my next bullet point. At times, you may notice smaller numbers at the end of a pair. These numbers are known as fractional pips, or pipettes. These are a new pricing feature that allow you to see more price action details and will help you make more informed trading decisions. A fractional pip is 1/10 of a pip. The addition of this feature allows you to take advantage of smaller price movements in the market. Instead of quotes with 2 or 4 decimals, there's an extra digit. So normally the Euro-USD's asking price will be quoted with 4 decimals. But with fractional pips, these prices can be quoted with an extra smaller digit that represents 1/10 of a pip. Earlier, we mentioned deals of 100,000 euros and $50,000, which may seem like a fairly large amount to trade, especially if you're brand new to trading. But no worries, this is where an important factor comes in, which is called the use of leverage. Leverage allows you to trade larger amounts than your initial investment. But we'll talk a lot more about leverage in the next lesson.